Good day, Junior Tikkie. This is Mrs. DeMailon speaking, and today we're going to look at the second part of Activity 3, the Post-Adjustment Trial Balance. Now, in Activity 3A, we looked at each individual adjustment, and then we did the analysis of it. So now we have to do the Post-Adjustment Trial Balance and show the calculations in brackets. So just to recap a bit, this is the adjustments. So number 1, we depreciate for equipment on the diminished balance method. Number 2, vehicles was bought halfway during the year, depreciate 20% per annum on cost. Sorry for that. And then commission income is owed 4,000 Rand to JT Supplies, that's us, so that's accrued income. Number 4, rent of 5,000 Rand was paid by the tenant in advance. So prepaid income or deferred income, income received in advance. Then the water and electricity account for October has not yet been paid. It's an expense not paid yet, so it's an accrued expense. Number 6, 1,000 Rand was paid in October for an advertisement that will only run in November, so that's a prepaid expense. Number 7 is where we need to calculate or compare the physical stock count with the amounts on our books. So that's a trading stock surplus or deficit. In this case, it will be a deficit. And then consumable stores on hand means that we still have 800 Rands worth of consumables left that I can use next year. So my expense is overestimated and I need to minus it. And then the interest for the last quarter has not yet been received, so that's an accrued income. And lastly, it was just a correction of an error where bank charges was posted to sundry expenses in error. Okay, so just to recap quickly on some of the calculations. So we did this in the first video, so I'm not going to go into detail, but just so that you know where I find the amounts from. So depreciation on equipment, a diminished balance, so I had to take the 250,000 minus the 60,000 accumulated depreciation, and I calculate for the year we get 19,000 Rand. For depreciation on vehicles, we only had it halfway through the year, so 6 months, and I calculate 32,000. Number 3, 4, 5, and 6, you use the amounts as is in the adjustments. Number 7, just to show you how I get the deficit, is you take the 242,000, which was the stock count amount, minus the 246,000, which is your book value in the pre-adjustment trial balance for trading stock, gives us a negative 4,000. That negative 4,000 means that trading stock is a deficit. And then number 8, as we said, interest on fixed deposit, 8% per annum for 1 quarter. So 1 quarter, remember, of a year. So a quarter of 12 months is 3 months. So that is why I say times 3 over 12 is 1,000 Rand still outstanding. Or you could have just calculated for the entire year. So 50 times 8 over 100 gives you 4,000 interest for the year. 3,000 interest on fixed deposit is already recorded, so there's still 1,000 Rand outstanding. Different way of looking at the same thing. Okay, continuing. Now, when we do post-adjustment trial balance, you need to remember that each adjustment has 2 legs, and that is because of our debit and credit rule. So for each debit, there must be a credit corresponding rule. That's the basics of accounting. Now, the rule for most adjustments is that the one leg is in the balance sheet and the second leg is in the nominal section. So if you debited the balance sheet section, you have to credit the nominal section, or vice versa. If you credited the balance sheet section, you have to debit the nominal section. So there's always a nominal section account and a balance sheet section account, an asset or a liability linked to an income or an expense, except where there's a correction of an error. There are 1 or 2 small exceptions, but this is the general rule that applies 90% of the time. So we are going to look first at the balance sheet section and then at the nominal section, just because I can't fit both on one slide, but I'll explain or have reference to the nominal section each time, and when I do the nominal section, I'll reverse back to that as well. So let's continue. So we have the post-adjustment trial balance, and basically the post-adjustment trial balance is exactly the same as the pre-adjustment, but I need to change some amounts where the adjustments were applicable. So if I look at the first adjustment, that was depreciation on equipment. So the first part of the transaction, the credit part, is to add it to credit accumulated depreciation on equipment. So adding the current depreciation for 19,000 Rand to the accumulated depreciation. And then the debit leg will go into the depreciation account. So that will be in the nominal section where you will debit that. And then the same, the accumulated depreciation on vehicles. Yet again, that's the credit. And then the debit will also go to the depreciation account in the nominal section, which I'll show you in the next slide. Adjustment number 1 and 2. Adjustment number 3 is where we had accrued income. Okay, so in other words, the commission income was still due to us. So you have to accrued income as a current asset, so that will be the debit, and the credit will be the commission income in the nominal section. Okay. Next adjustment is deferred income, and now this is then the credit, and the debit will then be the rent income in the nominal section. Then we go to the next one, which is the accrued expense. So the credit is here in the balance sheet section, because this is accrued expense is a liability, so crediting or increasing on the credit side, and then debiting water and electricity in the nominal section. So that's the other leg. And then we had a prepaid expense of 1,000 Rand. That was for advertising. Prepaid expense is now a debit here in the balance sheet section. So it will be the credit advertising in the nominal section. And then we had the trading stock count. So now with trading stock, the stock count amount, the 242,000, should be the new value of your new book value, because your books must match the physical stock count. So you always take the stock count amount and make it the trading stock balance. And then the difference between the 242 and the original balance of 246, that 4,000 Rand is then your deficit. So that will then go into trading stock deficit on the debit side. And this is then, this is a credit on trading stock. So the debit will go onto trading stock deficit. Then the second part of the same transaction was consumable stores on hand. Now I put on hand in bold in black because consumable stores on its own is an expense. The moment you add the words on hand, it becomes the asset. On hand means you physically have it in your hand, you can touch it, and you can still use it next year. That's why it's an asset. And then your consumables expense is over, so you must minus it off your consumables. So the credit will go into consumable stores. So this is all the balance sheet section ones. And then we go to the nominal section one. So back to first one is depreciation. Remember depreciation, we have to add the depreciation for equipment and for vehicles into the depreciation account. So 19,000 plus the 32,000, always show it please, 51,000 Rand. And remember, depreciation will never be in a pre-adjustment trial balance. The same with, if I go back to the previous slide, the same with the accrued income, deferred income, accrued expense, prepaid expense, consumable stores on hand. These will never be in the pre-adjustment trial balance because it's only end of year or post-adjustment amounts. So that's why it doesn't appear in the pre-adjustment amount. Okay, so post-adjustment, now we have to add the depreciation as we said, and that was the total of 51,000 Rand. The next, this is the debit entry, and as we just saw on the previous slide, the credit entries were in the accumulated depreciation on equipment account and the accumulated depreciation on vehicles account. Then commission income, was still due to us, so that was the accrued income, so that was the debit, and now the credit here, or adding it to my commission because it's still due for us this year, so that's why I'm adding it and getting a new total of 37,000 Rand. Then rent income was prepaid or in advance. So we received income in advance. So the 5,000 Rand is not for this year. So that is why I'm minusing it off for this rent income, because it's not this year's rent income, it's next year's rent income. And we have to adjust for the current year. So that's why I'm minusing it off, and I added it in as an asset on the balance sheet section because it's still physical money. However, I need to, or deferred income, I owe them the usage of the space. Okay. Then water and electricity account was still due, accrued expense on the balance sheet section, and because it's accrued, I must plus, I still need to pay it for this year. I need to record it in this financial year, so adding it to my expense. Then advertising, we prepaid for November. November is not part of this financial year, so I must minus it off this financial year because it's technically an expense for next year, and that's why I'm minusing it off. Then trading stock deficit, as we said, it's an expense, and how do I get the deficit? It's the 242,000 Rand that I counted minus the 246,000 Rand that I recorded in my pre-adjustment trial balance on my books. So there's a 4,000 Rand negative, and because it's negative, it's an expense or a debit balance. Okay, if it's positive, it will be an income and a credit balance, and then you'll call it a surplus. But in this case, it was a negative, therefore an expense debit. Okay, then consumable stores. We counted, we had 800 Rand left over. So included in the 7,300 Rand is 800 Rand that's unused. And expenses should record total usage. So if it's unused, it means we cannot record it as usage because it's not used. Okay, that's why we minus it off. So we minus the on hand off, and we can use it next year. And that's also, it's not this year's expense, it's next year's expense, because that is when I'm going to use it. Then interest income, there was 1 quarter still outstanding, so interest on fixed deposit, the 1,000 Rand there, I must add because they haven't recorded or deposited the money into my account yet, and I need to record it for this year's income. Okay, bank charges was the correction of error, so it should have been bank charges, but we recorded it as sundry expenses. So the debit is for bank charges and the credit is in sundry expenses. So I minus it off sundry expenses and add it into bank charges because it's not a sundry expense, it should be bank charges. So I'm just moving it to the correct place. So minusing it off sundry expenses, adding it to bank charges. And now you've adjusted all of the amounts that had adjustments and put new amounts in. All you need to now do to finish your trial balance is literally copy paste the pre-adjustment amounts, because if there was no adjustment, the amount stayed the same. So you literally, the blue ones that I highlight now is the ones that we changed. The other amounts literally just copy pasted from the pre-adjustment amount. So they're the same as the pre-adjustment because there's no adjustment for them. And then just note that these ones, accrued income, income received in advance or deferred income, prepaid expense, accrued expense, and consumables on hand. This is year-end accounts and will only appear in the post-adjustment trial balance and not in a pre-adjustment trial balance. And if we look at the nominal section, yet again, the same thing. All the blue ones is the ones we changed or adjusted. All the other amounts is literally just copy-paste from the pre-adjustment amounts. And then, yet again, depreciation and trading stock deficit is year-end accounts and will only appear in the post-adjustment trial balance. And then, what is a trial balance about? to see that our debits equals our credits. So if we end up with the same totals that at the end of your trial balance, you know that you've done all your adjustments correct. And shop, we are done. We know we've done it correctly, and we can high five each other or fist bump there. Okay. Thank you so much for listening. The next activity we will do again in 2 parts. So activity 4, the adjustments will be part A, and the post-adjustment trial balance will be part B. Looking forward to working with you on that. Thank you and goodbye from Mrs. De Melon.